Good morning. This is Vince Lanci, and this is the Gold Fix. I hope everyone had a happy holiday. That would be Thanksgiving for U.S. people, and Mazel Tov is in order for uh, Michael Aronovitz. He is an uncle as of Saturday. One of the uh, experts, leaders, and team members of this group here. I'm happy to be working with him, and congratulations to him. The Gold Fix. All right. I started out today really not interested in doing this because gold is only $2 higher, and I'm still not interested in doing it. But I'm interested in doing something else. But it will be gold focused. All right. Trade Russia, Brexit, QT, and nobody cares. Basically, it's the what's gold doing? It's the end of the world coming, and no one cares. Right? That's the title. Uh, by the way, just to give you a little inside baseball why I do this. That is not a good SEO headline. You want to put prices in the headline. You want to put exclamation points. You want to put gold's trading 1226. Can it go higher? Question mark. That's the kind of crap you're going to hear. And I can do that, but I think it's important that you guys know that this is for reading. It's not for confirming your own biases. Okay, but we have plenty of stuff in here to talk about. A lot of macro, big week on Fed talking, and I think if you know me enough by now, you know that I love talking about that on basically reading poker players, and in this case, it's Fed people. So you've got me talking about Fed people talking, me talking about Trump and G talking, and me talking about how hedge funds trade. Plus abuse for naked option sellers. And I don't mean it's wrong to sell naked options. I think it's wrong to just not know what you're selling. Okay. All right. So far today, I think we might have gotten the pictures straightened out. Hopefully, you can see those, and we will be on a computer really soon. I want to make sure that when we're on the PC, that we can take in calls from Zoom as well as from the Q&A. I want this to be more interactive. Also, one more thing, I want to plug this. Sometime this week, Tom McEntee and myself will be doing an options webinar. It'll be more than one day a week. I promise it'll be a ton of fun. Not only will we discuss our own experiences and hopefully throw something out there for people at every level, but we will be mostly having people ask us questions. I'm bullish on Facebook. What types of things could I do? It'll be basically live investment banking. I'm bullish on Facebook. What should I do? Now, we're never going to tell you what to do, but we are going to say this. Through a series of questions, quick questions, low, medium, high risk. I'm bullish on Facebook. What's your target? That type of thing. We will give you option structure. We will give you the risk, the reward. We'll even draw P&L graphs for you. And Tom and I will abuse each other, I'm sure, because of our similar backgrounds and our histories. But this will be great, I think, as an educational tool, whether you don't know what a call is versus you want to understand, say, Garch arch models or Gaussian tails. So at every level, you're going to learn on this, and I can say this with a lot of confidence. I've taught over 30 people how to trade, 10 of which are millionaires, and uh, and I'm good at it, and this is fun. And with Tom, it'll be even more fun because I think we have similar sense of humor. Also, shout out to Bryn and Tracy. I think it would be fun to do it with Bryn, but we'll do it some other time. Anyway, we'll talk more about that energy wise. She has her own partner in crime there, and who's awesome. My corn. All right, the dollar index is trading 96.76. Again, I could just stop this whole broadcast. Don't miss what Tom and I are doing this week, assuming we get to it. All right, dollar index is trading a little bit lower. The reason I will now do this, dollar index is trading lower, and the Chinese yuan is trading slightly stronger, is because the yuan is not in the DXY. Okay, and you know where I stand on that. All right. Geopolitical, right? So there's a lot of geopolitical stuff going on. Russia and Ukraine engages naval hostilities. Will be subject to UN Security Council meeting today. Timing is everything here, as Putin seems to be taking an opportune moment to make a land grab. Oh, oil's down. We make money when oil's up. Europe is totally preoccupied with Brexit and Italy and mass immigration So that's it. There's a little map. You can take a look at what's going on there, why that little thing matters so much. Okay, so that's Russia and the Ukraine. You can read that on your own, but I'm just synopsizing it. All right, this is important if just to learn how parliamentary Congress government works. The UK and the EU have what's called it's not a divorce agreement. There's another word for it. Um, Separation agreement. I don't know, but it's less like a marriage and it's more like a uh, wait. I have to get it now. I have to get the word now. I'm getting annoyed. Well, anyway, the agreement is taken care of, and now what matters is the withdrawal agreement. That's it. Okay. So the UK and EU, or May, has negotiated the withdrawal agreement. Now May has to sell it back to Parliament. Why is this important? Because it's not a given that Parliament's going to say yes. She's facing opposition. Um, uh, uh, yeah, Corbyn, whoever. You can read the details on your own. But the bottom line is, if they reject the deal, and it seems unlikely they will accept the deal, if they accept the deal, then we're done. If they reject the deal, then you have problems that you have uncertainty, and if it weren't so much that the dollar would get stronger, I would say buy gold. Uh, if 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 the government does not if Parliament does not ratify her deal, then you have two things that can. You have several things that can happen, but two that I know of are you could have May be thrown out or may not be thrown out, but that's irrelevant. What matters is without a deal, you still have an exit. So you have no transition period between now and the March exit, which would mean chaos. And it also increases, for right or wrong, it increases the likelihood of a second referendum. If you have a second referendum, is that even constitutional or uh, uh, legal? I'm not sure if constitutional is the right word, which itself causes problem legitimacy. Okay, so you can read that. G20 meeting November 30th to December 1st features Trump and Z with hopes of some way to avoid an escalation of trade tensions. Escalation of trade tensions. Stop right there. If you notice, the last two things that were said were dovish or good cop. Kudlow was good cop, and the markets went up. Stock market went up, and then Kudlow came out good cop again, and the markets ignored him. So watch how markets react to rhetoric going into this. If first of all, if they come out more optimistic again, they're going to lay it on real thick. I mean, he'll have the diamond cufflinks on and the really shiny gold suspenders. Kudlow talking. Um, if they come out negative, it'll be bearish for the market. I think no matter what is said, unless it's said by China, it'll be muted bullish or bearish for the market. But that's just an opinion. Um, so you can read that. Midterms are over, et cetera. Central banks, big speaking week. Fed members will be trotted out. Big three are the ones that matter to us. Vice Chairman Claritas is tomorrow, Powell Wednesday, and after the minutes, you have Williams. So you've got the there you go. Okay, one of our subscribers, Anna, basically said they're already beginning to try to delegitimize the first Brexit referendum. So it's really choppy waters, and that's how can you deal? You start a legal war there. That's just a disaster. And while they're trying, we'll come back to that. That's actually worth its own article. Um, might want to be trading the euro and the British pound today, and certainly uh, gold should be bid because of a crisis, but gold will not be bid because people are buying dollars if those two currencies are weaker. But gold will still hold up if the last couple of weeks have been any indication. I think the market's been giving us a nice opportunity to buy. Okay, data on deck. Thank you very much, and you too, John. Thank you very much. Um, there are no good outcomes here. There you go. There are no good outcomes. That's the bottom line. I think the worst would be a second referendum tying in with a March withdrawal. At the same time, it would be people running around with their hair on fire, and Europe doesn't want to have that happen too. Which is why Putin is doing what he's doing. Anyway, I digress. Data on deck. Uh, you see the data on deck right there. It's all about the Fed, but you do have some other data out today. In other money, let me see. I did that. Thought it'll be bigger. Okay. So here you go. As of about 7:30 this morning, the dollar was down a little bit. Gold was up a little bit. Now, those of you who look at the COMEX in the U.S., the COMEX pricing is at 2,230 to coincide with the old floor. But my system and this charting system, and I think most of the world outside of the U.S. looks at the close of the cash market, which also coincides roughly with the close of the U.S. Uh, Globex market. So you'll see gold futures uh, 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 on my system as up $1, $2, but in reality they closed they closed lower. So it's kind of like a fair value thing. So the pricing on the COMEX and the CME is tied to your statement if you're trading to the 2,230 close, and but the market on Globex doesn't close until 5 or 6. So different charts will have the market's up $4, the market's down $2. So it's a fair value type of situation. That's why I keep spot and futures next to each other. Uh, Gold is an international product. Yes, I trade in the U.S., but with the U.S. dollar denominated contract, but spot is what matters, especially when you start getting into products like silver. Silver is a little bit stronger. We mentioned the rest of the currencies that are of interest to us today. And let's go back to uh, outside markets. All right, so what we have is the 10-year seems to be hovering a little above 3%. In Asia, you had the Hang Seng was stronger, the Nikkei was stronger, very strong on I think bearish PMI. Uh, Smaller Asian countries are also stronger. By that I mean Vietnam and what have you. The notable standout is, although I don't have them here, Australia is weaker, which is I think going to be bearish for the Aussie dollar if it hasn't been already. Okay, energy's up about 1% after last week. Where's oil? Oil is okay. Oil's up over 1% now. About 1% after the last week or so of waterfall selling. At least one major commodity fund was done in as we sort through the wreckage. Reportedly, the world's largest oil fund, Andoran Commodities, lost 20% on the WTI sell-off. If you look at the market from the highest and lows and look at the move of 20%, you can get an idea of how much the market came off versus how much Andoran came off. That gives you an idea how much of their money was in oil. We all know about James Cordier, uh, basically no skin in the game. This guy, I think, was a CTA who had another company called Liberty. There's a spoof, I think, of his mea culpa out there. We'll try and get it up there for anyone's interested. In Asia, as I mentioned, Europe markets are strong with Italian bonds again giving permission to buy stocks. Risk on everywhere, it seems, despite everything else. North America, lower U.S. dollars coinciding with stronger stocks so far today, signaling more optimism that Powell may back off on QT. We just see a market that does Powell's job for him. Market goes down, people think Powell won't do anything, and then the market goes up. So it's just basically volatility killing people that don't know what they're doing. There is a gap above the market um, from a gap lower around 2670 and a half, 2671 in the SPX. That may be key today. I know we're gapping higher so far. Let's get to the gold technicals. All right. The gold technicals, average daily range is 7. All right. You start above, you start here. You start with this when you're looking at these. All right. 1230 spot 90 is your upside number, and 1223 spot 90 to 1225 spot 50 is this is these futures, which is about 50 cents or less above spot. Those are your levels. So above or below those levels, consider stops if you are playing the range. You can see the rest of his numbers here. I don't really have anything today, unfortunately, on the daily or hourly, which means I will have something surprise as the Fed gets ready to speak later in the week. And we do have something setting up on the weekly. I would say that the market is as long as it's above 1221. Uh, I think you can be biased bullish. I think we're getting an opportunity to accumulate here. Uh, uh, if you have, you know, $100 of gold to buy, I would buy 50 now in this range. You know, I'm speaking for myself. I'm not speaking for you. Don't be stupid. Do your own homework. In what's basically called a barbell investment. Investment's the wrong word. We're consolidating in this range. If you think that we're going to have an end to QT or whatever your reasons are, uh, you could buy half now, and then you could buy half if you're hedging dollar exposure lower. If we drop down to say 1150, and don't worry about it. If we go higher and you don't buy as much, then hopefully we're going higher while stocks are going higher. All right, so there's his numbers. 1223.20 is his settlement, which is uh, not what we're trading right now. All right, I want to put this up here. There are no VBS RTM levels except for a weekly, which I'll come to in a second. I want to put this up here for anyone who trades, period. And this applies specifically to gold, but it applies to every market. That's right, Drag. He's going to be speaking at 9 a.m. I have info on that as well. Knowing your bias. All right. What you're looking at there is a gold monthly chart, and that is a 12-month moving average. Now, I've done the work on this going back to say 2000 through so I stopped doing it about 6 months ago. But your average rate of return, if you buy when it settles above that, is positive 3.5%. Your average negative return, if you are long when it settles below that, is minus 1.5%. So that's not even talking about getting short. My point is, I'm not asking you to look at this and say, oh, let me trade on a monthly basis where I stop myself at the end of the month. What I am saying is this applies to many markets. I think more so than the 200-day moving average that people look at. When a market is below it, as it is right now, I am biased bearish for my swing trading. I am biased bullish for gold overall, but you can't just make your money being long gold. Buy and hold does not work in gold. You have to trade it. But as long as we're below 1267, that number is roughly there. The market is biased bearish. So this, if you look at this chart on a monthly basis, this could be a bear flag. Am I going to trade it that way? No, but I am going to be more aggressive as long as we're below 1267 when I get sell signals than if I do get buy signals. Going to the live markets, let's do that right now. Okay, so the dollar's bounced a little bit. Gold is trading 1225. Let's look at the spot market. Let's look at that, and I want to show you that on a weekly basis. So we have some trend lines that are being drawn right now that are coming in good. This is the daily. I don't like these last 5 days of sideways movement. Generally speaking, sideways is bearish for gold, and I'm not even being biased about that. What I'm saying is uh, the 5 or 6 green candles in this area going up, those are great. Um, but this sideways movement here is kind of bothersome. Uh, Usually, I would want it to pull back before it goes higher, but going sideways is kind of like a broken ledge, the hockey stick situation. Let me put the weekly up there because that's the only thing that's really interesting from a systemic trade. I don't see anything for us on the daily, but on the weekly, we're getting close to. I'd say by the end of the week, you're probably going to have a signal. But right now, you're looking at 1233 and 1190. So we're nowhere near 1190. But if we drop below 1212, I think 1190 will be a magnet for us. So there's my levels. But I think a week from now, we're going to have a nice signal. And I think probably Thursday we'll have a signal as well. It's 819. I'm cutting this short, but I do want to go to I wanted to go to this. All right. I direct your attention to this story here. First of all, read the overnight recap. It's great, especially this week. Talks about the whole year. Um, and it talks about, well, it's not just facts, it gives insights. It's a lot better report than what I'm seeing out there from other places. This is something that I put up for everyone. I draw your attention to it because it has the PSA about the options thing, but we're also talking about a nice macro report that talks about everything from energy to politics uh, 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 by the and it talks about shorting options, and how Larry and I talk about that. Larry being the short seller, me being the buy side, neither of us being ignorant of our own risks. Uh, Comments about the global economy, General Electric, California, and here's the full report. I really recommend that you read this. Uh, uh, it's good information, and it's written in a way that's entertaining. Plus, there's some end of the year book reading. Anyway, the mark, it's 8:20 now. I'm going to say arrivederci, and watch what's going on. I think the most important thing today will be uh, will be any news that comes out of Europe, and Draghi, who's talking at 9 a.m. Uh, why don't we? Yeah, Draghi's gonna talk at 9 a.m. Uh, uh, he's the whatever it takes guy. Uh, uh, but anything he says that's Brexit related, he's probably going to talk Italy positively, and anything he says that sounds worrisome on Brexit is going to be a problem. Italy seems to be uh, coming to the table. They might be willing to decrease their deficit target. I don't see that being uh, as positive as everyone else does. I think Italians are less like Greeks in the sense that they're not worried about double-digit inflation. I think right now uh, something else is going on. I think Brexit's more important. Anyway, have a great day, and thanks for joining me. See you tomorrow.